Hey traders, welcome to Charts and Coffee. Fantastic to see you here. Happy Tuesday, everybody. Hope everyone's doing well. All right, so we have a couple of things we need to take a look at before we dive into the questions. As always, let me know if there's anything on your mind, question-wise, symbol-wise. Phone lines are open for your requests. All right, so a couple things. Calendar, gang. Everything is about that calendar. I cannot emphasize that enough. And there we go. So Forex Factory calendar. There's two calendars I would really encourage everyone to take a look at. This is the Forex Factory calendar. This is where it's easier to determine what those high impact, high volatility, hot zones, right? They must be scheduled, gang. If something isn't scheduled, there's no possible way we can prepare for it. There's no possible way the market can really effectively discount. In other words, presume what the result might be and position according to that expectation. Forex Factory is a great place to start. The impact column is where I kind of coined hot zones, because the ones that have a red icon next to it, well, looks hot to me. And that's the way early on, early in my Forex trading career, when I really wasn't sure what economic events are important in other countries, I was able to determine that with that. And so hot zones have stuck. Today, not a lot. Remember, we had a bank holiday yesterday, and then today is really sort of the first full participation day in the US. Expect there to be maybe some pent-up trades that sat on the sidelines perhaps yesterday will come back in the market today. IMF meetings are today. We also have FOMC member Meester. I wouldn't say Jordan is necessarily a market mover in terms of the Swiss National Bank, that is the SNB. We do have BOE, Bank of England, Governor Bailey speaking. So a lot of central bank opinion out there, which is most definitely going to be reflective of global views of inflation and recession, right? What are the global economic narratives that we're having to basically trade through? Other than that, not a lot. But remember, tomorrow, PPI. And then as if that isn't enough, we do have the 10-year bond auction. We have more ECB meetings or more ECB chatter from President Lagarde, which is sort of the Powell of the ECB, if you will. And then we have FOMC meeting minutes. So this is going to be a kind of a reprieve, a calm before the storm, if you will, going into tomorrow. All right. That's what we've got going on right now. All right. So with that being said, good morning to our free trading room. Great to see everyone on the Simpler Trading YouTube channel, and also a shout out to the folks on my YouTube channel over at Raghee Warner. Great to see you all. All right. First question coming up. Let's dive into the questions, and I'll do my best to kind of toggle between the trading view charts and the think or swim charts throughout our conversation here. All right, so let's see. First up from Kelvin. Good morning. Thoughts on NOC? Sure. Let's pull that up. Anytime we're looking at NOC, we'll take a look, ideally also at the relevant stocks in the group around the ITB, etc. So just looking at NOC on its own, sure. What we have here, and I'm just going to kind of push the 5-minute chart out of the way, push the weekly chart out of the way. By the way, if you're looking at my layout ever, what am I going to keep on the screen? 3 time frames. The 5-minute for day trading, the daily for my overnight and or swing trading, whatever you want to call it, and then the weekly for my portfolio, my position trades. So this is a daily conversation. Unless it's another time frame, let me know. And let's start with structure. This has been a neutral market since mid to late April. It was in an uptrend before. A couple things to note that are really important. Where we anchor our volume tools matters, gang. Anchored volume. That's the big thing that a lot of traders miss when they wander into using a VWAP. They're not using a VWAP, right? Anchored volume, we're north of. 200 propulsion, the white dots, we're north of. And while this may not be an uptrend, it's certainly above the equator. It's in the bullish hemisphere. The trick is I really don't have a buy the dip opportunity here. Really, I really can't say I can surf the wave here. That's not something I can do. I'm going to jump on over to the daily time frame here with the wave and just remind everybody, without the 34 EMA wave of validity in the context of a trend, I can't buy the dip. So what are we going to do instead? Really easy. Look at our automated Darvis. We have a couple Darvis sitting at around 465. I would play an oversold buy. I'm not a momentum trader. We do have some momentum, obviously, in NOC right now. I would look for a little bit of a pullback, maybe even to, we could drop another VWAP and look for where there might be some volume. But I'll tell you what, if you're looking at something before a more significant move to the downside, keep an eye on 485, another important volume ledge, right? We've got that ledge point of control sitting at about 485. It's 484.83 is where it's sitting. So keep an eye on that, Kelvin. I'm fine with potentially looking at it as a buy, but don't buy it here because we are topping out near the +2 standard deviation. We've done that most recently about 3 different times. I'm going to presume that's going to happen again, and I'm not going to buy something as it's moving higher, and especially not within the context of a trend. So thank you for the question. All right, next up, Dustin. Good morning. What do I think about DHI versus Chewie? Well, I won't want to pit them against each other, but I see what you're saying. Which do I prefer? DHI versus Chewie. Now, they're 2 very different markets, in fairness to both of them. They're just 2 very different animals. And I would hate to say that we have to choose, although, look, allocating capital being what it is, sometimes it is smart to choose, to your point. DHI is neutral. It's south of the anchored VWAP. It's south of the 200 propulsion. I can't, and it's gravitating right now. Where it's sitting right now is right at this year's point of control. I can't say I have a tremendous edge on DHI, but that's not to say that other stocks within the ITB and XHB may not be helpful. Those are some things we can look at. In terms of Chewie, both of these are non-trending. Both of these are south of some important levels. I'll tell you what, Dustin, I got to be straight up. Probably neither. I think there's some setups within both. So sometimes, Dustin, I'll tell you this. Sometimes it's not a matter of my preferring one over the other. It's a matter of which actually reaches the zone. And either one of these, they both look pretty similar in terms of structure. And I would say that have a target and have a trigger for both and just see which one actually fires off the entry for you. That's my opinion there. Since neither of them are trending, it's hard to say I prefer one over the other. Right. All right. Mark's here rocking some Folgers, kicking it old school. Awesome. All right. I am Group. Microsoft. What's a good long-term entry price? Okay. Let's take a look. So for that, I'm going to head on over to the weekly. And that's all I do, gang. I'm just sliding these charts back and forth. When I'm in day trading mode, I sort of slide the weekly out of the way and take a look at one read for day trading that I'll see there that helps me with sentiment. I'll make the daily a little smaller so I can see the previous session's close and some other key levels in the daily, but I make that 5-minute really large. And so depending on what the objective is in terms of time horizon, I can slide these charts around in my layout. And so for a weekly conversation, that's going to be the time frame that maps to a longer time horizon. Keep an eye on that 200. We are coming back to a V-score low support level that we saw back on March 16, but March 2020. And we might get down to that level. Actually, we're at it right now. And then we're also at the 200. We're just starting to see on the weekly Microsoft perhaps turning into a downtrend. So it might be worth it, Group, to wait for a confirmation pattern in this area to make sure there's some momentum stirring about in this area. But yes, this would be a good buy zone to keep an eye on with that confirmation pattern. All right, next up, Risky Business asks, do I think the PPI will move the market tomorrow? I can't tell the future, my friend, but I know that the probability is that a high impact number, the producer price index. So some of you might say, Rod, what even is the producer price index? Do we even care? So this comes from the BLS, the Bureau of Labor Statistics. And there you have it right there. What on earth does a PPI measure? What is a producer price index? It's the change in price. And right there, you think to yourself, what column, inflation, growth, jobs, would that data release fall in? Inflation. As soon as we start talking about the price of goods and services, it may not be a CPI number, it may not be a PCE number, but it's going to fall in that bucket, which is a very important bucket, arguably the most important right now. So this is going to have an impact on the perception of inflation. Change in the price of finished goods and services sold by producers. All right. So yes, it definitely has the potential. Will it? Well, the will it has more to do with what is factored in right now, which is a 0.2. There are whisper numbers as well. Again, just like we have whisper numbers in stocks going into earnings, we have whisper numbers for data releases as well. There's the consensus, but then there's also that separate number that may be, also being factored into, or being factored into price is what I should say. But right now, it really depends on how it comes out in relation to that 0.2. That is what we have to think is most widely expected and therefore most widely discounted into the market. All right. Next up, Raghee, do I have my own trading room? I do. I'm in 2 rooms. Well, sometimes 3, sometimes more than that here at Simpler. But my main trading room is my mastery. It's the Sector Secrets Mastery. And you can check that out at sectorsecrets.com. And that'll take you to the page over at Simpler Trading that has the description of what we do. And then I'm also in the Simpler Futures room. All right, next up, crude oil. Sure, let's take a look. So we're off the announcement, last week's announcement from OPEC, which was, do we see a reduction in the price, in the output, and then therefore price movement heading higher, or do we see an increase in production and expectations for a decrease in output, less supply, and then that factors into the move higher we're seeing. I've been waiting for a confirmation pattern. We discussed this confirmation pattern, I think, in both the Sector Secrets room and in the futures room, and it's finally happening. Today, we're finally getting that confirmation pattern. So it's one thing to have an environment where we favor the short side. I'm not just trying to short a rally higher. I'm trying to look at the structure of the market, the structure that preceded the one we have now, which is definitely going to have an impact. The immediate psychology. Let's say we go neutral, right? Let's say we're in a bad mood. Let's use a positive one. Let's say we're really, really happy. And then we went neutral, got bored. But we're still going to have that lingering mood. You know what I'm saying? And the markets move the same way. So if the mood that preceded and mood trend, it's the same thing, gang. Mood trend, if the mood that preceded the market was bearish and we go neutral, there's still a little bit of that bearish lingering. It may not be the dominant psychology. We might have just become more neutral about things, but that bearishness is the fresh psychology, not the bullishness. So while we had a few days of momentum, it's more likely we're going to exhaust near or at the 200, near or at the mean of our V-score, because the market is neutral and not in an uptrend. We finally got our confirmation pattern. So crude oil is a short, Mr. Walker. Yep, crude oil is a short. What makes me feel that JP Morgan may be trying to bottom? Was that a question from? I don't think it's something that I've been talking a lot about, Sue. It might have been a question from another Charts and Coffee episode, perhaps. Sure. So it's not a predominant thought. It's not even a setup for me. Is it trying to bottom? It does look like it's trying to bottom. Yes. I wouldn't put it near the, so I guess I'm thrown by the way you're asking. I really am not giving JP Morgan another thought, to be quite frank, other than when I'm asked. Would it be a short the rip? It would probably be a little bit more appropriate to start thinking, if I'm going to favor one side or the other, it could be after a rally, I could look to short. But as long as we're holding the support level, and as long as we can remain above the -2 standard deviation, it's hard to be too bearish. But I can't say that I'm giving JP Morgan much thought either way, to be quite frank, unless asked. Okay. All right. Next up is, what are my thoughts on BL, on Blackline? It's choppy. It's neutral. It's been neutral for some time. So the further away from the previous trend we are, the more the neutral is the dominant psychology. So it's been months since we saw the persistence of the downtrend earlier this year. It's been months. So it's easier to say that this market's far more open to being neutral. There's a chance we could have a 1, 2, 3 continuation. Not a great pattern, but I would keep an eye on breaking higher through 66.70. I'd keep an eye on that. Yeah. All right. Got a question about Pepsi. All right. Let's jump into Pepsi. All right. So Pepsi puts us in that group with Walmart and Coke and other such stocks. So I bring that up because one of the things we always want to make sure we're doing is that we're thinking about other names that might have better clarity. And frankly, Pepsi's an easy answer for me. Any stock this close to earnings is a no-go for me. The moment, and so it depends on what kind of trader you are. You might say, Rog, you don't trade stocks this close to earnings? Almost never. If I have a stock that's 4 weeks out, maybe even 6 weeks out, I won't go much further than 6 weeks before earnings. 4 is a good number. So 4 weeks before, in this case, Wednesday, October 12th. So we're talking about September 12th, 4 weeks out. So I go about 4 weeks out and I look at what kind of structure we have. Is there any expectation, because there's trending structure, that we might continue with that direction as we go into earnings? If it's a neutral market, I'm not really that interested. However, we have been struggling with getting above the mean of the V-score since around that time, about a month back. And if I know I can't get above the mean and it's just banging its head against that level, then I know it's more likely going to be a short. Okay, so fast forward to today. Remember, about 2 weeks before earnings, there's an interesting transition that happens. Traders who prefer directional debits like myself, long calls, long puts, that's most of what I do, right? I'm long calls, long puts, and a cash account. I do very seldom do I do spreads, almost never. So long calls, long puts. I have to acknowledge that when we have such a truncated time frame to a high volatility event, my edge as a directional trader of debits, right, long calls, long puts, is nearly gone, because it favors, that 2 weeks into earnings favors traders who write premium, because the implied volatility goes up and my cost for the option goes up. And those traders 2 weeks out get to take advantage of an increased implied volatility, increased premium, and fairly intense theta decay as we go into likely what would be the near term expiration option date in front of that earnings release. And therefore I know about 2 weeks in, I'm losing my edge. And therefore the timing of that is just a no on the Pepsi. I'm sure there are other traders who want to do straddles, strangles, some kind of strips, straps, whatever spreads into this, but it won't ever be me. Very, very, very rarely. Now, after earnings, in the time that the dust settles and we get that extreme reaction, I might look to, in the 1 or 2 days past earnings release, I might look to engage the market at that point. So thank you, as always, for the questions. And that was from the free trading room. All right. Okay, gang. So that's it for me. And I will see you all tomorrow, same time, same station, here at the Simpler Trading YouTube channel. Free Trading Room, I will see you on Thursday and Friday. All right, gang, be good to each other. My futures folks, my mastery folks, I'll see you in the room for our morning of day trading in just a moment. Be good to each other.